Do the practice owner get any depreciation on the real estate if they purchase the real estate, or like the rent do they pay? Do they like write that off? Because I know some owners that buy the building for like whatever 500,000 or whatever. Are they able to tax write off that building when they're purchasing it, or?
Yeah, so the building would absolutely be depreciated. So a lot of times, so most of the time, they're not going to actually buy the building through the practice entity. There'll be a real estate entity, and then the practice pays rent to the real estate entity, and then depreciation is taken at that level. So in an S corporation structure, let's say that the practice pays $30,000 a year in rent, just hypothetically, $10,000 a year in depreciation, which is non-cash. So it's just a straight up deduction that you're going to get every year off that 30. So I'm automatically taking it to 20. And then, that will obviously offset taxable income. With an S Corp structure, there's no real difference in tax rate that you're going to pay on the business income versus the rental income. Without an S corporation, if you've got what's called a Schedule C, it's like a sole proprietor type structure, you would save self-employment tax on the rental portion of the income. So in that case, a high rent is going to serve someone in that situation in a lot of cases. So it depends on the underlying entity structure, but in all cases, absolutely, you're going to depreciate that property. It's not going to be an accelerated depreciation. Like you're not going to deduct $500 building in one shot. There is something called cost segregation that you can do to accelerate some portion of the building, but there's really no case where you're going to deduct the whole thing up front. But we can optimize it with something like cost segregation if it makes sense in the scenario.
And then final question. We'll let you go, I promise.
Sorry, I'm a talker, so
I love it, but I don't mind. We can sit here and talk all day. I think I for private practices, like just one practice, typically what type of entity do you want them to go? Is it like an LLC, S corp? Like which route do you like to go when it comes to that?
Most of the time, it's going to be an LLC, just because they're relatively inexpensive to form and also to maintain from an administrative perspective. Whereas if you form a corporation in most states, you have to have meeting minutes and like documentation. It's a little bit more formal and expensive to maintain. So a lot of times we go LLC, and then we can elect as corporation tax status. And that's always a big question my clients have. Like they're still legally an LLC, but they're just taxed as an S corporation.